Hey everybody, this is Jim at SP500chart.com. It is Saturday afternoon, about 1:30 p.m. on June 7th, 2014. And we're going to take a look at the S&P 500 chart as we do after every day's close. If you are not a member of SP500chart.com, then you get to look at all of the week's videos on the weekend after they were done. If you are a member, then you get to see these videos every day after every day's close with 99% fulfillment rate on that promise. So think about it. Go to sp500chart.com and check it out. Before we take a look, I need to remind you that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research, and you need to make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's see what happened on Friday and take a look at the week in general. Okay, starting out here on a 30-minute chart, and just to make it easy, here is our week there in that little yellow box. Whoa, what was that? So we came into the week really being inside this rising channel right here that is blue, and this channel developed after we had been in a more aggressively rising pattern back starting on the 20th, late in the afternoon of the 20th, running through to about the 27th. Then we started to go sideways with a slightly upwards bias. Now, at the time, we've had this line on the chart for quite a while. This is a trend line drawn across this top and this top down here, just kind of on a lark. And I'm not saying you do this all the time, but it's an interesting thing. But just on a lark, when we started to show a little bit of weakness when we broke this really rapidly ascending channel here, I decided let's take this line, create a parallel line, and put it down here. Let's see if at some point in the future that has anything to say about things. Additionally, we had this green line right here that I felt was a pretty good chance. A pretty good chance that we see some resistance at this line. Yet, here we are with 2 days close over this green line. And what I think has happened is once we broke over this neckline of our inverted head and shoulders pattern, and let me show that to you again, left shoulder, head, and a little bit of a short right shoulder. We've kind of grown accustomed to that. Once we got over that, it's as if, because that target is significantly higher than where this green line is for many weeks, it's as if this pattern is saying, we got to get this done. This green line, forget it. You're not strong enough. You can't hold us back. As a matter of fact, what I think this blue channel was actually a flag where there was so much pent-up buying energy, whether it's right-headed or wrong-headed, it's there. So much buying energy that even the flag didn't go sideways or pull back. It just kept creeping up. Then we hit this little perspective line, and then we had a nice 2-day move off of the low of about 1924 to 1949. So roughly a 25-point move, which is more than 1%. Well, I'll take it. Now, another thing happened that I want to point out. You'll recall that there was a while when we were stuck in this pattern for about 13 weeks. There was a while when the pattern appeared to be more of a rectangle, and I was discounting this little punch up over here. This looked like maybe a premature breakout. But I was thinking that if we could get over 1884, you'll recall this. It's not on the chart now because things have changed a bit, but I'm going to point it out anyway. The idea was if we could get over 1884, then I thought we should be getting up into the 1940s. Well, I guess we could say if that was a call that I had held on to, that target got met. But now I think the correct call is to look for something just this side of 2000. I believe, before it's all said and done, that the S&P should be hitting either the high 1980s or the low 1990s. And you can see that if we examine this little channel right here, and if we look at this like we typically get a 5-wave move inside a bullish channel, this would be 1, 2, 3, 4 will probably come back a bit. Your fourth wave, and I'm not an Elliott wave guy, but your fourth wave has a tendency to take back more of what took place on wave 3 than wave 2 takes out from wave 1. So, but to make a long story short, I believe we do at some point in the not too distant future end up at about 1990. So as the week went, I'm glad we put this line down. And I mentioned that by the end of the week, we would either have to, and I don't think these were my exact words, but the sentiment still works. It's either time to poop or get off the pot, because this line, which I was expecting for resistance, you can see we hit that early Thursday and then came back to this line, but then we took that line out, and here we sit at 1949, having fulfilled that 1940s target that I'd been calling for up until about 3 or 4 weeks ago. Now I'm thinking 1990. Additionally, I mentioned that that sometimes you get a little bit of a resistance that's kind of in the middle of this channel. I was surprised by Friday's strength. We got up over that little midline and really stayed over it the entire day. So it looked like we might have been hitting some resistance here, but Friday, nope. We got over that. We stayed over this line. And if you look at the chart and you have a reasonable expectation, I think the reasonable expectation is we're going to tag this red line. This blue line could be resistance. To remind you real quickly where that comes from, however, it goes all the way back. The last touch on this blue line was all the way back in late April of 2011. So, you know, I'm going to do something. I am going to make that a little bit lighter, just because from what we see going on here, it looks like we may be getting over this blue line. This line has not been approached in quite a while. It's been, well, since we hit it last in late April of 2011, we've not tagged that line in 3 years. So with that much space behind us, there's a very distinct possibility that not only will we test that line, but I would not be surprised if we test it, bounce off, and then test it again and get over it to meet this target up here at about 1990. So guys, I think it was a great week. Again, if there was a mistake that I made, it was let's watch this green line, thinking that would be a pretty good opportunity for some resistance to set in. That did not happen. If there was a good thing that happened, it was sort of lucky. It was seeing that our little speculative parallel line to this resistance line up here, that did indeed provide a bounce. So, I mean, I do not recommend putting blind lines down like that with only one data point. I don't really think that's a safe thing to do, but if you want to do it as an experiment and then watch it like an eagle, that's cool. But I would not have mortgaged on a long position right here. As a matter of fact, my long positions are in place. I'm sitting on them. I'm waiting for signs of a top. So far, it looks like we're in a new leg up. So guys, thanks for watching the video. Great week. Just chugging right along. Let's see what happens with trading as we move into the week of June 9th. And it's kind of looking like sell in May and go away ain't the way to play it in 2014. Thanks for watching. Take care.